Aloha, good morning. We're here today with Mike Martin, the owner and enrolled agent. Well, if we need to explain what is an enrolled agent, it's the highest certification in taxation recognized by the IRS. He's the owner of Malakina Accounting Services. So we're here today to explain what's happening with the tax bill that is being passed recently by the Senate. And I know a lot of people are being anxious with what's going to happen next year when they file their taxes. Maybe this is not the right time because it's the holiday season, but next month is January 2018, and I think this is the best time to get informed with what's happening and how we can be ready with our tax filing next year. So Mike, the first question I have for you is, what do you think about the changes that's happening with the taxes? What is the effect, especially I'm a realtor, what is the effect with the real estate market, especially here in Hawaii?
These are very good questions. As a homeowner, I'm very interested in what's going on too. And I think if anybody's watched the news and watched our nation, we've seen now the debate about many of the different itemized deductions associated with home ownership, investment properties. It's been a heated discussion among our nation. Currently, right now, both our Senate and our House have passed their version of what they think that should look like. Currently, it's in committee between the two chambers, and hopefully by the end of the month, as we all are anticipating this joint bill or this coming together, that it'll get passed, and then key decisions about how we live, what we buy, what we can write off, and we can start moving forward, especially in 2018.
Okay, so you mentioned about write-off. I think most of us, even me, I'm sometimes confused what is the difference with tax deductions and tax write-offs. Can you please explain that briefly?
Yeah, a lot of these between write-offs and deductions, the key thing is understanding the impact of your income, your expenses, where it gets identified. Like, for example, we have itemized deductions, things that are specially identified with certain lifestyles and items. With home ownership, we've been used to writing off the property taxes that we've been paying for, also the mortgage interest that we were paying for in the past, and hopefully we're currently looking at those, especially in Hawaii, that will pay a mortgage insurance premium. So those are deductions, things that are specifically line item. When I say write-off expenses, we may identify that with income. For example, if I have a business, I may have certain expenses that for tax purposes I could write off. A good example of a lot of our realtors and people who have their own business is the ability to write off their mileage associated with their business. So that would be something that's technically not a deduction, but it is a write-off specifically identified with a practice or a business or some kind of way we get income.
I know it might be a little early to talk about the changes with the tax deductions that is right now being in the process of being, is the right word passed, or by the Senate and the Congress. So what do you think will happen with the tax deductions, the itemized tax deductions for homeowners that have the value of their home is like over 500,000?
Yeah, the big issue right now that we're watching from Congress is the issue of writing off mortgage interest associated with the home. There are certain criteria, as most of you know, in dealing with owning a home, for the capital gains if you sell your home in the future. Currently, it's if you reside in your home as a primary residence for 2 of the last 5 years, then any capital gains up to 500,000 if you're married, 250,000 that's single, becomes tax-free, so you don't pay any taxes on that. Now they're looking at changing the criteria possibly from 2 to 5 years that you need to reside in the home out of the last 8 years. So that could be an impact on future selling of a home in regards to that. So there's one area that you're looking at. Another area that seems to be a debate between the two chambers is the issue of how much you can write off for the interest that you pay on your mortgage. Currently, there's no limitation, so you are able to write off mostly for everybody in Hawaii the mortgage interest that you pay in a year, that you would be able to write it off. Maybe a quick note is one of the nice things you could here, if you have the ability to, is put a 13th payment in just before December 31st to make sure that you can get it against your 2017 taxes, and then see what we can do with going forward with 2018. The idea, especially with these two areas, is requirements associated with being in the home. And that's what we're watching for right now, and how Congress will deal with that.
Okay, so these changes will not be applied for 2017. So will this be, well, it will affect us next year, 2018, definitely, and it will be for filing in 2019. Is that correct,
Right.
Mike?
The issue that you always have to watch is the fine print. And traditionally, most things are always voted on and goes perspective. You go forward. However, there are sometimes that there are things that are retroactive. The word on the street, as most people know, is most of the items they're looking at is moving prospectively. However, just keep an ear to the ground, and we'll be able to give you that, what things are effective as end of 2017, and then ultimately moving into the 2018 tax year.
So is it right that they really want this passed and approved by the president by end of this year, 2017?
Well, yeah, there's two parts to this. Number one is they need to pass it by the end of the year, because just the way our tax laws are and moving forward in 2018. So history has shown us December is always the last minute. That's the way Congress gets things done. That's life. That's what we'll have to work through. But I think what's exciting about this is that they are pushing things that will give us a more definite answer associated with home ownership, or if I'm investing in properties, which is another big thing in Hawaii, that we can be able to give that information as both tax professionals and as individuals who are concerned how my money goes moving forward in 2018.
Okay, so I know there are a lot of questions about the changes, but can you have a good advice that you can leave to our audience right now in terms of home ownership? If they're getting ready to buy next year, what do you think would be the best advice for them?
Well, I think number one, home ownership. As the opportunity this year to finally to buy a home in Hawaii is always a good thing. It's matching up the deductions and the lifestyle, both how much you make, as part of owning a home is just part of your bigger picture of life. And so owning a home can bring those tax deductible items that can be associated with it. And again, the future, we don't know what holds the future in tax wise. We've seen our nation go back and forth based upon different preferences. But the best thing overall, still look to buy a home. If you have the ability, invest in Hawaii, because in the bigger picture, these are things that become valuable to you and your family.
That's really a great advice. How about for the sellers? I have a lot of homeowners that purchased 5 years ago, and they have so much equity, and they're thinking of upgrading or maybe a possibility of investing. What would be your advice for currently homeowners or investors that are thinking of selling next year, 2018?
Oh, great question. And the biggest issue that a lot of tax professionals have is keeping receipts as you improve the value of your home. As you may have bought a home, let's say maybe 5 years ago, at $600,000. But over the last 5 years, you've improved the value of the home. You may have done some remodeling, some upgrading. So as you improve your home, the basis or the amount you figure your capital gains now goes up, so you can be able to have so let's say you make $50,000 worth of improvements over the course of your home. And so instead of calculating based upon that 600,000, you've made improvements, 50,000. So some of those things is key, is as you've improved your home, keep the receipts. That's number one. Two, if you're looking, especially before you sell the home, to do some improvements, again, you're increasing the value of your home for costs for calculations for capital gains. The other thing that's important is keep all your paperwork. Your closing statement is so important because it contains a lot of valuable information about costs that you can write off in regards to selling your home. So keep these things in mind as you prepare, if you have that opportunity in 2018 that you would like to sell your home. Keep that documentation. It's very helpful come tax time.
That's really a great advice. Yeah, it's like a reminder for most of us who are investors and would like to take advantage of the seller's market and the opportunity we have here, especially in Hawaii. Okay, for the last question, I know it's been how many minutes already, and you have a very precious and busy time. What would be your advice to make us ready in filing for our tax next year?
Paperwork, paperwork, paperwork. Never take lightly any paperwork that comes to you associated with taxes. A great tax professional will always ask you to give documentation. As the IRS is becoming more modernized, the ability for them to audit becomes greater. The biggest issue that any IRS auditor has is proving your expenses or proving what you've done. So I recommend to a lot of my clients, just have a folder, just stick everything in the folder. I personally, and I know a lot of my tax professional friends will say, give it to us, let us sort it out, because we may find something that you may not be expecting. The more documentation that you can help us, the better than we can help you in providing information and hopefully giving those tax deductions you didn't know about, but hopefully we can find for you.
Thank you, Mike.
You're welcome.
I really appreciate your time today, and I'm sure a lot of you would like to give Mike a call or email him. So look at the information right below for Mike Martin, contact information if you need help or guide or just question about your taxes. Thank you again.
Thank you.